Hello, everybody. Chad Lubin, Cross Country Mortgage. This is your weekly market update. Always want to deliver transparent, honest news, and there's just no way to sugarcoat it. Inflation is creating havoc on mortgage rates. The Fed did increase the prime rate 0.75%. That is not the sole reason that mortgage rates went up. Bond traders did not like the news that the Fed thought that these massive increases are taking any hold. So I believe that their increases take 6 months, 3 to 6 months to hit our economy, anywhere from 90 days to 180 days. So I believe they'll increase once again in November, and they might just keep increasing now until March, and that's what bond traders are scared of. So when we look at these charts, this is the beginning of September right here. We have lost 400 basis points in mortgage bonds, which means interest rates have increased about 1.5 to 1.75%. So there's just no way to sugarcoat it. Mortgage rates are getting crushed. I still believe that real estate is a great place to put your money. When you compare that real estate continues to go up, despite the economic challenges, and the stock market's just getting crushed. I have a ton of money in the stock market. I've chosen to diversify and buy more real estate. So I'm buying rental properties right now. I'm buying Airbnb properties. I am not putting that much into the stock market until it shows a bottom. So that's what I believe in. I wanted to talk about some positive reports that came out yesterday as far as housing. So let me just get that chart up here. So when we look at, this is new home construction. You've seen me share this new home sales, excuse me. These are signed contracts for the month of August. So the total for sale inventory of August was 461,000. The annualized sales pace is 685,000. That's up 29% month over month compared to July. So the housing market is still really strong despite these rates. That's due to low inventory. And they actually adjusted July's numbers. What happens is they release these reports and they are estimates, and then they go back and get the actual numbers and revise the numbers. And July came back another 6% higher. So when we factor that in, housing sales pace is up 34%. So the monthly sales pace is 57,000, right? There are only 49,000 homes being completed. So there's still more contracts being signed for than houses completed, right? Now, what the media is spinning this as is they compare new housing starts, and you can't compare that because when a home has its permits pulled to build, it's going to take a year and a half to complete. So we got to compare the sales versus the completed homes, and they're still running at a negative amount. So when we look at this 57,000, there's less than 1 month of available inventory. And remember, an average real estate market is 6 months of inventory. The median home price is 436,800. So listen, we still have a very low inventory. We still have a very strong housing market. And until inventory is larger than demand, we're just not going to see home prices go backwards. And then the last report that I wanted to share with you is the Case-Shiller report in July. So year over year, home appreciation is up 15.8%, right? An amazing number, especially when you compare it to the stock market being down, depending on your investments, anywhere from 20 to 25%. So that's why I've decided to continue to put money into a little bit in the stock market, more into real estate right now. So the media is spinning this that, hey, appreciation is starting to go back, right? The major declining cities are leading to this. So San Francisco is getting hit hard. Seattle's getting hit hard. San Diego's getting hit hard. Los Angeles is getting hit hard. Denver is getting hit hard. Many of you are in Chicago. That was actually positive last month of 0.2%. South Florida is up almost 3%. So when you take these cities out, these major cities that ran up so much, we're still positive for the month of July. So you have to look at these reports and you have to get the facts and not listen to the headlines and not listen to the media spin, because they're always going to spin these things negative, and we're going to report them transparently. So we would love to continue on your home search. We're happy to run any numbers. You heard me predict that mortgage rates were going to go up tremendously. 3 weeks ago, I offered many of you to lock in your interest rate on our lock and shop program. We can still do that for you. You get the advantage of protecting your interest rate for 90 days, and you get the opportunity to relock lower. So those of you that took advantage of that and listened to these videos, you probably just saved yourself over 1% in interest rate on your new home. So continue to watch these. We're here to support any numbers you need, Rand. We're here to support your home search. Give us a call with any questions, 312-731-4939. And thank you for your time. And we're always here to support your housing needs.